As we emerge from the seasonally weak July to October spell, we study the Wyckoff theory and cycles to understand where the opportunities are coming from. Because as Gary Glover's noticed, healthcare and builders look to offer a lot of opportunity. The sector of property trusts have really been hit hard. Some of them are down 70% or lower. And we're looking through these to find if there's a value share, an opportunity, and to understand how it fits with the cycles to get that timing just right. Good morning, Gary. How are you?
Yeah, that's good, Chris. Yeah, I mean, look, it's always dangerous to be sort of trying to pick lows, but if we do look at some of the larger Wyckoff cycles or Wyckoff theory, there's some interesting patterns developing on some of these most beaten up sectors. So yeah, it's sort of probably just important. It's just worth having a look at some of those at the moment here as to what's going on. And as you're right, we are in that. July through to October is kind of the seasonal weak spots. We've seen a few seasonal charts there, and we've, as much as we're sort of hoping the market would have held up a bit better than it has, it's been definitely a bit weaker than maybe other third years and pre-election years. It has mimicked the normal cycle almost identically to the normal seasonal cycle. So so probably. It does suggest maybe you get a little bit more softness here in early October there, but we're in that sort of window there where the market normally turns up here.
Okay, well, in your report this week, you've got on screen here your portfolio, the update, then you've got the indices that you normally cover. You've picked out quite a few shares to talk through, and then the Wyckoff schematics at the end. Did you want to work through them chronologically, or did you feel like the schematics need to be brought up?
Yeah, look, we just go through the indices. Yeah, we'll just go through from the start there. I mean, look, the indices haven't done too much there last week, probably just a bit more downside testing there. I guess the big question here, Chris, is this just a classic three-way pullback, like a classic ABC, or is there sort of something more bearish there? I see a lot of people posting, some the old 87 and all the crash cycles there. A lot of people were predicting a black Monday, which never obviously did come to fruition. But that's just because they don't know the cycle. To be honest, I don't know there actually is a crash cycle, and it's not the one that actually everyone puts out. Everyone puts out this sort of it's got a 86% correlation rate and stuff there, but there actually is a potential. There actually is a crash cycle, and it's actually a time setup. We won't cover it here today, but maybe we can cover it, in a few weeks' time or something when there's not much else happening. But there's plenty happening at the moment. But the one thing else is still not sort of seeing heavy volumes here, Chris. I mean, there was a few distribution days off the peak, and then off the sort of I think the NASDAQ had maybe the most. I think the Dow had the least. So yeah, look, it's had a bit more weakness here, but still not seeing anything aggressive there. Not seeing anything super impulsive here as well. So it's not really, you sort of obviously the bond yields are really sort of squeezing, the market a bit here. So that's obviously negative for markets here. But really, the market's still holding on here. It's just, maybe it's just the seasonal weakness here anyway. But I mean, so far it hasn't been incredibly impulsive, and we're not sort of seeing any, really aggressive sort of follow through here so far. So far, it's just looking like a normal correction there.
So a normal correction, and you mentioned the NASDAQ sort of been weak, but kind of holding those levels. It's undercut the low, and it looks like the S&P500 has done something similar. They've undercut the more recent low to a greater degree on the S&P500 than the NASDAQ. Could this possibly be a reversal, or it's too early to tell? You'd want to see a bit more volume or insight?
Yeah, we'd like to sort of see it maybe hold off the bottom. I'm just looking through the bottoms there, just that sort of channel line there. So, yeah, we probably want to sort of see that, even though there's not heaps of touches there, probably want to see a couple of, sort of see it hold there and bounce from there. But, so far, you're just not sort of seeing, we've had maybe that one decent down week in there, but all the rest have been pretty small. Even like last night was actually not a bad volume night. So actually, like a lot of the indices there was sort of started up, faded and then recovered. So quite surprised actually we're off, 110 here this morning, considering Dow was off 70, 80, S&P was up a couple, and the NASDAQ was up a bit. as well. So, but we know in these sort of high inflation environments, we do get this choppy, sideways orientation. So the swings are bigger. Even though we might go sideways orientated for the longer haul, in the short term, you do get some pretty big swings there, which probably making it hard to be an investor and a trader here, I guess, with those sort of swings there. So, but yeah, I guess in the next I guess in the next sort of week or so here, we probably want to see that level hold there. We want to see a bit of a reversal there, just to make sure there's nothing going on here. I guess the big fear is just those bond yields are still pretty high. That's when the yields are that high, so probably get a bit of money moving out of equities into that, into bond yields, just kind of flight to safety there.
Yeah, we definitely do see those transitions with the yields driving the investors' decisions. We're still on the Aussie below those highs and trolling out, but you've got a nice question mark here, sort of undercutting these lows temporarily. And as you pointed out last week, the equinox sort of held. I'm not sure about Melbourne, but Sydney's definitely turned the corner in the last couple of weeks from a feel in the atmosphere side of things. The weather's turned it into a different city. Sort of that can have a movement on people's investment decisions and behaviour. But is this kind of low holding? How do you see this moving here on the chart?
Well, it had held the last 4 or 5 days, Chris, but today it was definitely well and truly broken there. So that's not so positive breaking through here. So we've now sort of come back to the sort of 6-9 region, which is sort of back to that March level. So if you look at our sort of daily chart, which that 6-9 had a couple of touches there, sort of in sort of must be in January there in March, and they were sort of quite deep lows at the time there. So that is a bit of a level there. I wasn't expecting us to sort of get down there, but we are down that level. So yeah, look, maybe we're just going to chop around here sideways. I mean, but yeah, look, slight concern here that we have broken that trend line. But I guess if you look at the bigger picture there, it is a bit of a sideways orientation trend here. So US markets sort of underperformed here as well in terms of. So yeah, if you look at sort of the 40s and 70s, when you sort of see those, just up and down, up and down, up and down, it just feels like we're going to be in that sort of, we're going to be in a bit of a grind here. So that's why, people sort of keep referring to the small caps here, and even some of the mid caps as well, and they're underperforming. So everyone's saying there's value there, but if you go back and look at those 70s charts and the 70s performance there, you know that the growth end of the market can have multiple years and many years. And we had, I think something like 7 to 10 years underperformance. So that's just not a sector you want to rush into. So everyone's saying there's value there. History tells us that's just not the place to be here in high inflation environments. So, the value shares is the place to be. Commodities is also pretty robust as well. So that's probably the upside for the Aussie market, is we do have plenty of value shares, sort of shares that are good quality industrials that pay a reasonable yield. And then we've got plenty of commodity shares as well. So that should be reasonably positive through this period for us. But yeah, apart from today showing a bit of weakness there, that generally should be, I guess the lessons from the 40s and 70s, that those markets went sort of sideways orientated there. But I guess you're just going to have some decent swings back and forth along the way.
Well, you did talk about value shares, and we'll get to some good charts in a minute. To round it out, you've got the Dow Jones. You mentioned it was behaving a little bit differently. We've broken you've got a negative break here. So we've had this upward channel that had been holding in between. It's now closed down below it, and possibly after last night even further below. Any more words to add to that, or you've kind of summarised it before with talking about the other US indices?
Yeah, look, I guess you think this might have held on a bit better here, actually. Probably was originally. It did have, it has had a lot of volume through there, Chris. So it hasn't had as many distribution days like NASDAQ stuff there, but it has been sort of weak here, and that's probably sort of painting a bit of a clouded picture there, because that's breaking that sort of neckline is a bit of a negative sort of picture there. So that's not great. So But I guess in these sort of choppy markets there, maybe we are going to get lots of these, chop back and forth here. So so probably just maybe it's going to have a tempered view here. Just you're kind of seeing it in the market too. We're just not seeing, seeing lots of good setups there, Chris, but not seeing too much follow through from those setups just in general. So just making the market pretty choppy here overall.
Well, that's when we come to you for guidance in finding good opportunities, good setups, and possibly high return, low risk setups when we're looking at the Wyckoff side of things. So you've brought in ResMed into this week's report, RMD being the ticker. Looking at this chart, we can see the massive reversal on big volume. So it's fallen. You've talked about this fall in consecutive days, and then just powers off the bottom with a good range and good volume. Today's a different trading day. But what's this telling you from a trading perspective?
Yeah, there's a couple of things going on there. There was actually a nice GAN cycle in there, 144 calendar days, sort of from that sort of main lower high there, and April, May 23 here. And there was a bit of resolution there off a lot of those other turning points there. So it was just sort of something to keep an eye on there. I obviously did think this was overdone here. I just, thought the market got a little nervous about, anti-obesity drug there and what effects that might have on the whole health industry, and obviously how it might affect sleep apnea. Obviously, there's some correlation there with obesity and being heavier and then having and requiring a sleep apnea device. But I mean the stock's been sort of twinked on that. And I personally, I just don't see a pill being the long-term solution there. And it is actually a diabetes drug. It's been around for a while. There is some side effects of that. I'm not sure whether patients will be able to stay on that for a long period of time. So maybe it'll have an effect on sleep apnea. I just can't see it having a long-term there. And I think what was the sort of third world? I think you're sort of seeing it with Europe and India. They're emerging nations now, and they're having exactly the same health profile as the Western world as well, and that obesity is growing in those sort of new markets there. So fortunately, the planet is eating too much. We're producing too much food, and we're all getting heavier, and that does put a bit of pressure on the health industry and stuff there. But I can't see this pill having the type of effect that the market sort of priced in here. Maybe too negative there. There's a possibility that sleep apnea might keep growing, Chris. So I think the ResMed's had something like 15% return on equity here for the last 5 years, so pretty good growth. So I just think the market sort of maybe panicked here. Just reminds me of sort of Cochlear. We had cheap Chinese import there. Years ago we were talking about the stomach band, basically sort of curing obesity and stuff there. I personally think it's just going to be hard work, diet, exercise, just all the classic things which people aren't prepared to do sometimes, the hard work to cure it. So, and until we sort of, reduce, salt and sugar and foods, processed food and stuff there, then, I just can't see it. I reckon it's a great opportunity. And so I'm sort of waiting for a bit of a bounce there, but you're seeing big outside week, a massive volume there, which is pretty bullish sort of signal after an aggressive sort of sell-off like this. So, so sort of any sort of weakness back in the range, I can just see this going back here. So I think in the short term, it can go back to that sort of swing low there around that 27, 28 level. But, if you look at what happened to Cochlear and stuff in the past, they over the next sort of 12 months, they went back to their highs there. So, there's a possibility here that ResMed may not be, this mightn't be affected at all. It might be years away from being affected. So this one's pretty interesting to me. I actually think it looks pretty good. I've sort of got a fairly decent sized position there. This is one that I've encouraged the clients to buy and hold here long term. I just think it's a great managed company there, and I just see the market get too fearful on some of these things time to time. So yeah.
Okay, well, if we move into another market leader, CSL, who has had some scares with changes into the environment, but obviously they're a bit more monopoly on the side of things with the blood products. They've come down as well. So they're getting back towards this support region that you've highlighted here with these two red lines forming a band. Is that providing potential opportunity to pick up a large growth company?
Yeah, I mean, again, just this whole sort of 40s, sort of 70s inflation theme, and just look at a chart of, I mean, even something like CBA was seeing CBA is sort of what 90, 106, 108. Just the market just keeps going up and down in that band here. So a lot of the stocks here now are getting established trading bands, and they're staying within those bands here. So CSL no different here from some of the others here. So around that 242 is probably the lower end of the band here. So I thought anything sort of what 255 to 242, you're sort of getting into the like the lower end of this price band here. So it's still got a reasonably high PE, CSL, but it does have a bit of a monopoly as well. It's sort of definitely a leader in space there. So again, another pretty well managed sort of company there, CSL. So, but I just sort of see this just typical of the environment we're in at the moment, Chris. So it makes sense to me to be sort of trying to pick this up at the bottom of this price band.
Well, if we're talking about other companies trawling the bottom, move into the building space. And the building space has had some terrible news. So in the last 12 months, we've seen more bankruptcies from that area that industry than any other part of the Australian market. And we've had a lot of news from Canberra talking about the next 5 and 10 years and the number of dwellings being built. So legislative movements and pressures. How do you see Fletcher sort of trawling along this bottom here? It's almost like it's bouncing along this support line and possibly giving you some sort of signal. What's this signal?
Yeah, so it's again it's kind of starting to establish a bit of a base there, really. Again, just sort of in this sort of in this sort of sideways orientated sort of price bands here. So just notice that 420 has been a big level for it. Then some sort of signs of accumulation every time it sort of gets down there. So and again, we sort of know in those sort of these sort of value shares there, sort of once they get down to the lower end of the PE and the high yield sort of level, that's when these sort of stocks are getting some support here. So just think maybe the stock's going to be sort of caught here between maybe 420 and 520 for a while here.
So that's another one into the construction space. We've got Lend-Lease, which is an old favourite. It's been on indices for a long time, but we're seeing sort of a similar pattern here, like you're talking about, possibly whether it's yield value getting mopped up around these lower levels. How would you see a trade, or what would be an indication for you to get involved with Lend-Lease?
Yeah, so it seems to me like the sort of $7, sort of $7.15 level seems to be sort of where this stock's been sort of getting, has bounced a few times here. I do like the fact that the last sort of rally here has gone above the previous swing high. So, because prior to that, we've been in a bit of a strong downtrend here, hadn't really broken a swing high. So basically been trending down, which is always a bit of a worry. If you're trending down, you can continue to keep trending down. So you kind of want to sort of, if you break a high, that's a good sign. It's sort of, breaking two highs is a better sign that maybe you're heading up. But so far, this probably indicates that the downtrend has sort of stopped here, and maybe we're going to go through a bit of a sideways orientation here. But for the time being here, looks like that sort of 715 to 875 might end up being the price band here. I just think this is going to be the nature of this current market here, is we're going to be caught in these bands there. When these sort of stocks get down to sort of lower PE levels and then the higher yields there, then we'll get interest there. We've seen the volume was pretty solid on the rise, and we've seen the volume start to taper off in the pullback. So I think this is what the market's going to start to look like for a lot of stocks here, actually. So yeah.
Well, another one in the construction with a lot more global exposure is RWC, Reliance Worldwide. Similar thing, coming from higher areas, so 660, come all the way down towards 280. You've got some bit faint here on the chart, but we can see 100% zero from the low to the high, and then you're seeing the pullback. What's that, about halfway? Did we come and touch that?
Yeah, so the stock's had a bit of a pullback to the 50% of the range. It's also come back to the 50-week moving average. And we just come back to sit on top of the previous little high there early in the year as well. So we've sort of got a triple support zone there. And we're seeing there we bounced off the first time there pretty aggressively, good volume. And we saw some good volume bounce off there last week as well. So yeah, it looks pretty solid here. In what's maybe not so solid market. So yeah, I think this is definitely an area of support here around that sort of 360, 370 mark there.
After Reliance, we've got PRN. So you've got bouncing from another key support area, being the mining services company. The highs, lows come down. Didn't quite get back up to it, but it seems like, if we're to use the terminology that you've taught us over the years, a bit of an impulsive move off the low and more of a correction in time. Is that timing also part of the factor here?
Yeah, there's a bit of an ABC in there, a bit of a flat correction as you point out there, and it has held up pretty well considering how much time it's used on the pullback here. So that's a pretty good sign there. This company did report pretty well, Chris, as well. It's got pretty strong growth in that mining services area. Did pull back after the report. They're probably, sometimes market can get a bit ahead of itself with these growth companies. They're looking for them to sort of hit it out of the park, and then maybe they're priced to perfection a bit here. But this is still a pretty, pretty strong performing. I think the full year revenue is up 18%. So, still this business is still sort of growing quite nicely, which is what sort of you're going to want to see in this sort of, I guess this mid sort of tier sort of section there. So it is probably not in the perfect zone there, but you will see some of these companies that are sort of still growing quite nicely. You still do pretty well in here. Just might take a bit of time here to build here, but I think this looks pretty good here.
Well, back into the construction, we've got Cromwell Property CMW. This you've got here a monthly chart. So sometimes it's daily, sometimes it's weekly, but we can see the explosive move into the ramp that we had, then led into the GFC and came down dramatically. Recovered to where we were pre-COVID, but we went into lockdowns, and this one didn't really recover out of it so well. It's kind of just continued to slide down. So echoing what we talked about before, there's changes in Canberra, talking about the number of dwellings in the country and talking about builders going to the wall. How do you see this chart, and is it sort of a Wyckoff thing that's coming to mind, or what does this bring to mind for you?
Yeah, a couple of things there. I mean, obviously, I do look at sort of Wyckoff theory but we've sort of got, we've had that sort of massive run there, obviously, into 2007, and I had the GFC collapse there where, property trusts got absolutely belted. And then we basically recovered, gone back and retested the high, so basically made a marginal new high. And then our theory suggests if you make a marginal new high and you fail there, you come back and retest the last swing low, which it's done here now. So now, if you want to look at the S&P500, the monthly chart, you'll see that the GFC low, which was around the 600, might have been 666 or something from memory, on the S&P 500, that made exactly the same pattern. So basically came back and made a new low. And at the time they're watching this thing come off, when it was off about 35%, I thought, oh no, surely it's not going to come all the way back down to 50% correction on the S&P 500. It's not going to come back and retest that low, but it has done. And I've seen this pattern, occur quite a lot here. So, it's interesting here that the property sector is really, if you go through the stocks here, they're all under massive sell pressure. There's some really aggressive sell downs there. I mean, there's some 40, 50, 70% corrections in these property trusts there. So just an interesting sector there that's really, taking sort of carnage there. So what's the market worried about there? Worried about default, debt, interest rates staying high, people not coming back into property trusts. So, we're pricing in a lot of doom and gloom here. So just a sector I think is pretty interesting here. And if we look at that sort of DXS sort of chart too, that's probably one of the more sort of stronger, probably better performed property trusts there. And it has sort of like, this sort of base that it made in sort of 2021 there that was a Wyckoff sort of setup as well. That's sort of what they refer to as the Wyckoff schematic number 2, which is sort of like a cycle that Wyckoff paints, and then the other sort of Wyckoff schematic is Wyckoff number 1, and that's when you bounce around at the lows and then you punch through the low, and then the market, we get our spring there, Chris, which is and the market turns there. So haven't got a spring here yet, but we did see good volume there last week and a bit of a recovery there. So okay, interesting here. We've sort of got this sort of Wyckoff set up again for the stock here. A lot of carnage for this whole sector. So definitely sort of got me looking through some of those names there. Again, don't like to sort of bottom pick here, but the sector has sort of shown there that, when things look their most dire and had a pretty nasty correction there, can recover there. But yeah, it just got me sort of thinking I need to do some homework on this sector, because it feels like the market has priced in an awful amount of doom and gloom here. And maybe it's pricing in too much doom and gloom there, because we've seen in the past there the sector can recover pretty quickly. So, I know property valuations, typically in high inflation environments, continue to keep climbing. Obviously, you don't want to have debt, because obviously interest rates will be, have to service that debt at a higher price. That's the negative. So you've just got to be careful of property trusts with high debt. But yeah, are we concerned about companies going back into the city and stuff there? The banks have already started to call staff back in. There's a lot of things, a lot of the productivity studies that are showing that people aren't now as productive in the last year, sort of working from home. So a lot of sort of staff getting called back in the office as well. So just interesting from a lot of those perspectives there. So not saying property trusts have found a low here. I'm just saying some of these cycles, some of these price actions are telling me there that we could be close. So it's worth doing some investigation here and having a look at this sector here. So, in the past there, when things have looked their bleakest, these things have recovered.
Well, it's probably a good point to look at your charts and use that as a learning experience for you to guide us through these schematics that you've put into this week's report and talk. So number 2, you're saying DXS made structure number 2 recently, just up here. How does this, so this is Wyckoff method. Do you want to give us a quick background on Wyckoff, where this came from, and then more importantly, what this chart is?
Wyckoff's got a few different theories and stuff. It looks at sort of the theory of sort of just price bars, but also the bigger sort of cycles there. You sort of got 2 accumulation type sort of schematics, how lows sort of come in, and then there's also 2 sort of phases of highs coming in. So 2 accumulation sort of setups and 2 distribution setups there. The 2 that sort of, with the deep lows is oftentimes you sort of see that sort of sell off there. You make your sort of, do most of the damage there early, have a bit of a bounce, go back and retest the low, and then maybe you sort of start building from that sort of phase there. And the 2 variations is that schematic number 2 makes a higher low, does a lot of work here, and then builds a bit of a base and then recovers. And then number 1, basically, you make the false break, which is one of the patterns that I love sort of watching for. It's just sort of going to a new low and then failing to sort of push through and then recovering there. Sometimes you can get fast moves here, but other times you can just be a bit of a building phase here. This is just a couple of setups to sort of keep an eye on there. Just interesting that DXS has made sort of, made one of these previously, and now sort of, making a similar sort of setup here. So, the question is this going to, resume the downtrend and, continue a lot lower, or is this a possible spring here? So, I just thought last week was pretty interesting price action, and some definitely buying volume did step in there for DXS there. So, just worth it for me. I sort of thought, okay, let's go. I need to go do some more homework on the property trust sector. Have a look at some of the charts there. Let's, see what's emerging there.
Well, that's a really good breakdown, and handy to have these charts. So probably worth taking screenshots for those watching to put these, like I can see, and I know that you do, you've got them printed up. So when you're looking and scanning charts, you've consistently got these within eyeshot. So you look at your charts and then you quickly glance back.
Yep, 1, 2, 3, 4, right here. And I've got Stan Weinstein's a little bit higher. I've got a couple of Liverpool speculative charts as well. Just some setups just to sort of keep an eye on there, because again, markets follow sort of, a number of different rhythms. It's a bit like our sort of our seasonality, Chris, as well, and our cycles. There's I guess like I view it as a bit of an 80%. 80% of the time they follow these sort of cycles, and then maybe 10 to 20% of the time they might vary and do something a bit different. But what's the phrase? There's nothing new under the sun. We just keep saying the same setups and price over and over again. So yeah, and what's the phrase there? It's the phrase that's cost everyone more money than any other phrases. It's different this time. So but when you hear that, you should run.
But it is different this time.
Yeah.
Well, they're really handy insights to go through, and yeah, really encourage printing these screens and getting to know and being familiar with these charts, because the amount of times that they just rehash themselves, small caps, mid caps, large caps, Aussie, US, just keeps happening. So human psychology, whatever it is, there's a good way to make money, and this one in itself is a great book. It just talks about you can make a living just trading that strategy there. I know we've both read that and loved that chapter. And as you said, that's false breaks and a pattern that you really love. So that's also worth looking at.
Well, think about logically, Chris, if you're sort of buying near the low and you got a pretty tight stop there and you get a big move, then you don't need to be right an awful lot of the time to get a good risk reward. So if you were basically getting if you were wrong 3/4 of the time and you were sort of risking, say, 5%, and then in the quarter of the time that you made, say 20 or 30%, ones you got right, it's definitely going to pay for itself there. So kind of right. I think anyone who's listened to Larry Hype before, he talks about the 52-week highs. Once the stock goes, he said, it's got an 80% failure rate, but the 20% that's correct will get you an annual 20-30% return, because those winners are just so big, they keep running. So it's just most of us aren't sort of brave enough or can deal with the
fail rate.
With the failure rate. But I think the false breaks here has probably got a much less failure rate than the 52-week high. I'd say it's probably, I reckon it's 50-50 personally. Particularly if you look at the bigger stocks rather than the smaller ones, probably the 50-50, if you get rid of small caps and mid caps and just focus on the bigger ones that make the false breaks, I think you're easily 50% there. Success rate on those sort of setups.
Well, that's where the secret sauce that we always talk about is then if you're identifying the chart by itself, but then if you have the overlay of the rest of the sector and see strength in that sector and the peers, that's the secret sauce that really tips the odds in the favour. But getting sidetracked, we've got these charts, we've got a good map for the road ahead, some really good insights, and we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's talked about the 40s and 70s a lot. There's a whole playlist of that and things like spring setups and the like. There's a whole playlist to the right. Gary also looks at the market leaders on Friday. So he looks at the top 30 momentum companies and also the top 30 launchpad companies each week. That playlist is to the right as well. And his Twitter handle, or his X handle, is over there on the left.